Great day, beautiful people. This is my second attempt at making this video. My first attempt, I recorded the video in a social media platform and it was immediately deleted. So I'm taking another route, but I felt like it is extremely important for me to provide you guys with this content and this information. So here we go. I have been reading and researching the Biden administration and the things that they are trying to do with regards to this proposed monitoring of accounts over $600. For those of you who haven't been, reading or watching any of the news and the things that's been going on, I'm going to give you guys a quick synopsis. But first, let me say I am not a tax professional. I am not a CPA. Although I have a background and a degree in finance, I do not give you any financial advice. All right. I am just here relaying the information that I am learning and providing you guys with some resources and information in which you can go research for yourself. All right. So make sure you do your own due diligence, hire a tax professional, hire a CPA, and someone that can help you with your own financial situation. All right. So if you haven't been following the news, if you haven't been reading the proposed Biden administration, essentially they are looking to start heavily monitoring any accounts in which you receive $600 or $600 or more is going into the account. So Venmo, PayPal, Cash App, even direct deposits they're proposing are things in which the IRS, they're asking that the IRS heavily monitor, and even financial banking institutions to step in and monitor as well. They're saying that they are proposing this because oftentimes individuals are under claiming or not properly claiming the amount of funds on their taxes on an annual basis in which they are receiving. And when I say claiming, I mean, claiming that those finances as earned income. So the administration feels like there are loopholes. Individuals, making, over a certain amount of money are not claiming on the money, and there's money being left on the table that can be used and allocated from a tax standpoint to help facilitate other things within our country, right? So with that being said, they're targeting Venmo, Cash App, PayPal. They're asking banks to look at, financial institutions to look at your direct deposits, any funds that are coming in your account, which are $600 or more. They're asking for this bill to be passed. Now, it has caused an uproar. Many people are not happy about it, which I definitely understand why. And they are going talks back and forth with raising that amount from $600 to upwards of $10,000. So we'll see how all this plays out in the upcoming months. But currently, right, if you have a Venmo, if you have a PayPal, and you're using these pay processors to conduct business, whether you are a small business owner and you use these and you invoice clients for services, currently the law states that if you make over $20,000 or more annually, or if you process more than 200 transactions, you receive a 1099-K from these institutions, in which you have to claim that as income for your business or for your personal side, depending on how you file your taxes, right? But those are the individuals now that receive that 1099-K. What the Biden bill is proposing is that individuals that receive over $600 receive a 1099-K, right? It's crazy. So it can be for personal funds or business funds in any of your financial accounts, all right? So they're saying if it goes into effect, it's gonna start January 1st, 2022. So if you are a small business owner, if you are an entrepreneur, or a budding entrepreneur, if you are an individual that works as an independent contractor, DoorDash, Instacart, Zelle, not Zelle, if you have a small business that you run in which you depend on these financial sectors or these financial businesses to help earn income for your business, you definitely got to pay attention to this. You got to be doing your research and your due diligence, because this could affect the way in which you manage your business from a financial standpoint. Also, for my experiential marketing professionals, this is something you definitely got to pay attention to as well, especially if you're being paid from agencies via Zelle or PayPal, or being reimbursed for any expenses in which you occur during an event or during the actual tour. So I've been doing my research, as I said, and reading over this, and I've come up with 3 tips that you can implement um, at any point, whether you're a small business owner, experiential marketing professional, to assist you with making sure that you're setting yourself up for success in case or in the event that this law goes into effect, with your finances. So let me go ahead and start at the top. Number one, you need to read your contracts thoroughly, or if you're a small business owner, make sure that you set up your contracts in a way which makes sense for you financially. All my EXPs, my experiential marketing professionals, make sure that you understand whether you will be compensated as a 1099 independent contractor or a W-2 employee. Take the time to make sure that you read your contracts thoroughly, that you understand how that compensation will be paid out, whether it will be via direct deposit into your checking account, whether you will be receiving a live check, or whether that company has opted to take a digital route and pay you via Zelle or via PayPal. All of these things are going to be factored in, into understanding and making sure that you are compensated accordingly. For all my small business owners, make sure that you take the time to set up your contracts in a way which benefit you and your small business. Make sure you have an EIN set up. Make sure you have a business checking account set up in which you can receive funds, allocate, and make sure you're accounting for any and all expenses. All right, which leads me to my second tip, is make sure that you separate your business and your personal expenses. Yes, I cannot tell you the amount of people that I've met who combine both their personal and their business expenses and their business income into one account. That is a big no-no, and let me tell you, you're going to make your CPA or your tax preparer's life a living nightmare. All right, so start now, set the foundation, and create a business account to keep your personal and your business account income separately. This is going to save you in the long run. This is going to assist you in making sure that you're able to allocate all of your expenses, that you're able to budget accordingly, that you're able to see the profit and the loss from your business and understand how your business is operating. If you work in the experiential marketing industry, and you pursue and you execute events full time, this is your only career. Many individuals have opted to create a LLC and work under their business. That is also an option as well. If you decide to set up your business, make sure you have a EIN number, and make sure you take the time to register your business with the state in which you live in. And after you do all that, make sure you set up a business account. You can also do this as a small business owner if you're starting up a new business as well. This is going to assist you in being able to apply for lines of credit for your business, to build business credit, especially if you're looking to fund projects in the future. And it's also going to help you with being able to appropriate and understand and see from a financial standpoint how your business is doing, and ways in which you can improve your business and see income. And not only that, if you have a service-based business where you're working with clients, where you're working with professionals, you want to make sure you have payment methods and things set in place where you can be receiving those services, receiving payment for those services in a organized and allocated way. So I cannot stress that enough. Being able to set up and separate your business funds and your business profits from your personal profits is essential. Okay, it's going to save you time, and it's going to help you when you get ready to file your taxes at the end of the year, because we don't like to pay Uncle Sam. I know I don't. So having your things organized and in order is going to help you, especially if you run into an issue where you have to be audited. Okay. And lastly, you got to create a system for your finances. And I'm not just saying, okay, setting up an account, I know where my money's going. I'm good. I don't need to do anything else. No. Just like you set up systems for your business, whether it be marketing, whether it be social media, whether it be hiring the right people, whether it be setting up content and knowing how you're going to schedule, your social media posts. You got to have systems in place for your business and from a financial standpoint. If you're unorganized, if you don't have systems in place, this could be an issue in the long run and result in you having to reallocate your funds or even having to pay Uncle Sam, or not. At the end of the day, just not having your business in order is not good. All right. There's no other way that I can say it. So, systems, what do they look like? It looks like taking the time to separate your business from your personal expenses. It looks like having balance sheets. It looks like implementing systems such as Expensify, which help you allocate and track all of your expenses, whether that be on your personal or your business. You can categorize all of your expenses, and at the end of every month, they provide you with a breakdown, a totality for each category of how much you spent. This helps you with tracking. This helps you with being able to budget for the rest of the year. This helps you with being able to just physically see how you're spending your money. If you have a small business, implementing something like QuickBooks, especially if you have employees in which you're paying as contractors, is highly important. This is going to help you with setting up profit and loss statements, with setting up balance sheets, and with just overall being able to provide a snapshot, whether that be every month, whether that be semi-annually, with regards to how your business is doing. Also, having meetings with your CPA or your tax preparer, whether that be every 6 months, whether that be every 3 months, sitting down and looking at where your income is coming in and seeing ways in which you can reduce your tax liability is important. You can't just go into business. I don't care if you're working as a experiential marketing professional. I don't care if you have a small business. I don't care if you're just starting up a business. You got to start thinking about foundational things, right? And what you need to do to set yourself up long term for success. We are moving into a digital world. Everything, whether it be online shopping, whether it be processing transactions, can now be done with the push or the click of a button. So with that being said, making sure that you're setting your business up from a digital perspective, and that you are putting the systems in place on the back end to protect yourself and your business is important. I cannot stress it enough. The last thing you want is Uncle Sam in your business, and especially if they're talking about monitoring accounts over $600. You definitely have to make sure that you are taking the time to allocate this. You're taking the time to really think about long term how you're going to scale your business. What does that look like? And making sure that you have the right team and the right people in place to assist you with making sure that you're practicing smart money tips, that you're separating your wants from your needs, that your CPA or your tax preparer has your best interest, and that you're allocating and you're accounting for each and every expense in your business. Whether you work in experiential marketing and you're traveling and you're making sure you're being reimbursed for any expenses, allocating your fuel, allocating the things in which you can write off as a small business owner or even on the personal side is important. So do your due diligence. Continue. I'm going to post the links in my comments where you can go and read about this proposed tax law, but definitely start thinking about ways in implementing systems for your business, because whether it happens now, whether it happens next year, there are going to be changes occurring, and the government is going to be looking to crack down and looking for ways in which they can make sure that they are getting all their coins from us. All right. And the last thing you want to be is unorganized and just be giving money away because you didn't take the time to do your due diligence and set your systems up. So set yourself up for success. Small business owners, experiential marketing professionals, read your contracts thoroughly. Make sure you separate your business and your personal expenses and your business and personal income, and make sure that you have systems in place. So in the event that you are audited or that an investor is trying to work with you, or even if you're looking to secure lines of credit to grow your business, you have the systems in place and you're able to pull any financial documents that they need because it not only shows that you are serious about your business, but that you take pride in being organized and making sure that you are running a business or your personal expenses are all in order. So I summed it up. Make sure, take the time, go read the articles, go do your own research, go do your due diligence, find tax preparers in your area that can help you navigate through all of this so that you're making sure that you're setting up your business from a financial standpoint and a business standpoint for financial success. All right. This is Jay checking in with you guys live. Enjoy the rest of your week. And I'll be dropping more gems in the upcoming months. Later.